Hi and welcome to the Market Alert for Friday the 13th, an ominous day if you're superstitious. But yesterday, bonds bid as Nasdaq faces worst drawdown since Lehman. Build bear bigger, I like that. That's a skit on the Build Back Better of the World Economic Forum. Slow motion crash drags futures below 3,900 yields and cryptos tumble. However, we saw the market rally, and boy, is it up overnight. The Plunge protection team have been busy, that's for sure. US producer prices rise more than expected in April. The data suggests persistent inflation in the production of pipeline will continue to filter through to consumer prices. And then Powell sees more pain ahead, admits soft landing is out of the Fed's control. So the question of whether we can execute a soft landing or not, it may actually depend on factors that, like this get out of jail card bit, we don't control. News today, not a lot. Prelim UM's consumer sentiment, this is out. This is dropping down to 64.1 or forecast 65.2, and then Mester is speaking at 5 p.m. So everything will be done and dusted more or less by that time. Gold-silver ratio heading for that 100 that I've spoken of. There's still a chance that we could get there. Certainly looking at the $20 for silver price. It's not over yet. We're only 18 days down straight, apart from one day closing above the 5-bar moving average. Never seen it in my life. But that's what you've got to do if you want to save the US dollar. Okay, let's start off with the Dow for yesterday. You'll see the market has bounced up off the lows of yesterday, and we've got an oversold market here in the daily chart. These are the upside targets. First, obviously, being the 5-bar moving average, which the market's currently trading above. But at the moment, we're seeing some support, and when you come off the lows and close like this, that is a good support for the market. In the 30-minute chart of the Dow, the market sold off initially, and then the market was bought. And this is the classic Plunge protection team activity here before the close, bringing the market back because they didn't want any carnage on Friday the 13th, unless they're expecting carnage as they've traded up to yesterday's high, and then they can bring the market back. But at the moment, it's looking like they want to try and bring this market, get rid of all of these headlines about everything crashing, falling out of bed, etc. And the same in the DAX. We can see this also, if I can find the chart. There we go. You can see also moving sharply up on the overnight to the 62% retracement already from here back to here. We've got the 20-bar moving average in the way, but expect this to continue initially. This morning when the futures opened, the market trading down to the 62% retracement yesterday. We've got a supply here. That was absorption of the volume. The stochastics have crossed. We've got a green parabolic, and we're moving back to the upside at the moment for the DAX. Also yesterday, you'll see in the 30-minute chart, the market was sideways, stuck on the low. See how important the low was. Then they got the memo that the Plunge protection team were in, and the market just continued to move up 200 plus points, 200, 300 points actually. We've got 100 there, 200 there, 300 points off the low in the afternoon. Then the market put in a retracement, and overnight the market has then put in 100 points, 200 points, nearly 300 points on the overnight as well. So watch this 300 point. It's a big move in the DAX. 300 points is certainly way above the mean for a move in the DAX. So watch out at the next sort of BRN up, which is going to be the 13,950. In fact, having read that, let me just drag this down, because 14,000 is going to be the area that this market is going to be gunning for. It's going to be the R2. That's where it's going to go. So don't be surprised if the market moves up 100 points when the cash market opens to get to that 14,000. That 14,000 has been a major psychological level for this market. In the weekly chart, you also see prices moving higher, getting close to the 200 MA there as well, and attempting to move higher. And in the 5-minute chart, the activity for yesterday was mainly sideways until we saw what happened in the afternoon. So you've got a situation there where the market was oversold. We had divergence, we had the volume. The market managed to break to the upside, traded up to the 200 MA. We then became overbought and the market headed back, making a oversold situation back to the low, which it did several times. The market then moved higher, became overbought here, but failed to move lower, held the low, and then continued to the upside there. Again, you've got a big retracement here of 78%, 89. There you go, you can see that there, 78, 89 in this area, crossover back below the 200 and back down to the low, and then a retest at the S1 when the Dow was moving in the pre-market session, trying to bring prices back up. So here at 1:30 we had news. I think it was the producer price news. Again, retested, got momentum switching, and then the market trading up to the 200 MA became overbought, traded back to the 20 bar moving average, and then we kicked off with the Dow and the Plunge protection team assistance, moving the market to the upside. Anything to help get the market back up, and you can see overnight as well how much effect this is. This is a big move for the overnight of the German DAX, and like I say, watch the 14,000 area. I suspect we're heading back there during today's session. And in the currencies, we can start off with the daily GBP JPY, the market trading through the 89 and the 50 yesterday. Trading at the 62 at the moment, but crucially the 78% retracement and the 200 MA is required to see the market hold at this level. At the moment it is sideways to higher, and in the 30-minute chart, again you can see that we came off that sharp low yesterday. It's a classic sort of climax to market activity, and then you start to see the Plunge protection team get in the market, and it just drives and drives and drives the market back to the upside, just to try and save the market by selling the VIX. In the pound, this still continued to move lower, down at 122 area, and in the 30-minute chart we got a bit of a bounce overnight. You can see there the retracement, oversold, demand, and moving back to the upside there. At the moment, the market trading to, let's just have a look, it's about 78, isn't it? Yeah, bang on, 78% retracement. It all depends on what happens in the dollar index this morning, so let's have a look at that. Start off with the dollar. Yesterday it made a new high in the dollar index, 104.91, nearly got to the 105. Big move to the upside yesterday, which forced the metals lower, which for me they still haven't finished yet. $20 for silver, but let's not get ahead here. 104.91 and a half for the dollar index there, but you can see massive volumes there over the last few days, but showing a bit of weakness overnight there. Again, you've got that new high there at 104.85. And back to the metals, you can see silver slammed again yesterday. Interestingly though, in the 30-minute chart, have a look at this, you'll see this big spike down. The market failed to come back, went back to the previous day's low, and then traded down and made a new one. We haven't finished yet. If we go to the monthly chart, this is $20, and for me this is where the market's got to go first, down to this level, before it can move around and go back to the upside. And they've got to stop pumping the dollar or creating the illiquidity in this market as well, and that's what they're doing. They're making the dollars thin on the ground so that they can keep the price up, knowing full well that it's not going to hold. Gold, 200 MA was taken out yesterday, but trying to find a bit of support there at the moment, but nothing like the pummeling that silver's had over the last 18 days. One day it's traded above the 5-bar moving average. That's 18 days straight to the downside. Never seen anything like that before. And then in crude oil, moving back to the upside after huge demand here as well. Spoke about the diesel shortage that's coming and obviously this is having an impact on the crude prices in the background there. So stuck in a bit of a sideways channel there, aren't we? But if it breaks out to the upside, then we've got some targets to get back to, and I suspect as we go further forward into the spring and summer, we will actually get to see this. Okay, that's it for this one as we head into the weekend. It's Friday the 13th, as I said at the outset, so let's see what happens during today's trading session. And with that, as ever, thanks for watching. See you in the next one.